Hi guys, I'm Ryan Mack and welcome back to the Trading Guys. This week we're going to do the weekly fundamental review as always, and then we're going to have a look and see what potential setups we have coming this week. Excuse me. Now, last week, this is an interesting one for you and I hope it brings some real insight. Last week I had a losing week. It was tiny. I think I posted a video beforehand when I was at 0.40%. So it's like less than 0.5%, right? Considering from all my trades last week, I had a maximum 2.25% at risk over, a broad spectrum of trades. Excuse me. I ended up having a losing week, which is perfectly normal. Even if I lost it all, guys, and I was minus 2%, that is perfectly normal. However, this is very interesting. I did not have a losing week by being too greedy, by breaking rules, or over risking. Do you know why I ended up having a losing week? It was by being too safe. Ironically, I had the losing week by being too safe. How? I hear you say. Because of all the trades between winners and losers that kind of brought it down to a small minus, I had 3 trades that in the end up, look, I list all my trades down, right? I mark all my trades down. Green means win, blue means break even, red means loss, right? This is my risk, this is my gain, this is my, if I took it, if I just seen it, blah, 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 and the pairs and stuff, right? Buy or sell. Now, the reason why I had losing trades from being too safe, out of all those trades, 3 of them were break-even trades, right? Now, what I did was, they were actually in very good profit. And because I was going to my bed at night, I thought, you know what, I'm going to set this at break-even. So at least now they're running in good profit. I'll set them at break-even, and it's a risk-free trade, right? Excuse me. Now, when I woke up the next day, all 3 had been stopped out at break-even, and all 3 had already started melting again in my direction. And obviously 2 days, I didn't re-enter, and then 2 days later, I'll tell you how much they went up. The first one that was break even would have ended up being 1% gain. The second one at break even would have been a 2.3% gain. And the third one would have been a 4.2% gain. So it's at 4, 5, 6, potentially. That could have potentially been a 7% week for me this week if I wasn't playing it too safe. Now, that's huge insight for you guys, right? Excuse me. I live in Jakarta. It's crazy polluted, and I've already been out running this morning, so my chest is fucked. How crazy of insight is that, though, right? And I like to be very honest, and I'll always share if we have a winning week, a losing week. Why was it a winning week? Why was it a losing week? Because these things are very important, and I just find it mind-blowing, which is why it's very good to write down your trades as well, right? Which is why I find it mind-blowing that I had a losing week by being too safe. I didn't break any rules. I didn't over-risk. Everything was 0.25% each time. But yeah, had a losing week because I was too safe. I thought that was just massive insight not to share with you guys. Sorry, I'm just topping up my yerba mate. And then we'll crack on. But fantastic, eh? Now, for those of you that know, what we do is every single day, or every single week that we do this, we do it all the same. It's a habit, right? So you're going to write trades at the top. You're going to write strong on the left. Then you're going to write weak. And that's in the center. And then on the right-hand side, you're going to write neutral. I'm sorry if you hear this every week, but like I said, I never know who's watching my videos for the first time. I know you may be sitting there thinking, why is it strong, weak, and neutral? Surely, logically, you would write strong, neutral, and weak. I understand that. That's true. Pardon me. But what we're going to do is, every week, we write down strong economies, i.e. strong currencies, weak economies, i.e. weak currencies, and then the neutral ones. And what we do is, at the end of that, you score out whichever currencies are neutral, and you just ignore them. You ignore those pairs, and then whichever pair is strong and weak, you match up a strong economy to a weak economy, and that's how you trade. That's how fundamental trading is done. That's how the world markets move. So, for example, have you ever, like, when you're in the beginning of trading, right, or even now, maybe you've been trading for a year, but you still haven't, the penny hasn't dropped, you know? Have you ever looked on a pair like GJ, for example, right? And you're sitting there looking at GJ and you're like, man, it's going down here, it's going up there, it's going down here. How do you actually know if I'm looking for a buy or if I'm looking for a sell? Fundamentals is how you know. There's always going to be ups and downs because you need pullbacks, right? Pardon me. But how do you actually know if you're looking for a buy or sell? It's through fundamentals. So the simplistic way to look at what is the job of a trader, right? A trader at a bank or whatever, or any trader, even retail traders, the job of a trader is to take trades with the highest potential and highest probability of giving you a good return on investment whilst providing the lowest potential risk. Now, there's always going to be risk, right? Like if you enter GJ and it starts melting because the Bank of Japan intervenes and it's melting because of intervention, you can't do anything about that. It's just a trade that's going against you, right? Because you don't know when the Bank of Japan's going to intervene, and these things happen. But the job of any trader, a banker, whatever, is to take the trade which he believes is going to give the highest probable potential of return and the lowest probable potential of risk, right? That's the fucking job. That's it in one sentence. Now, how does he do that? The example I always like to give, right, because I know we all like to draw stupid fucking lines, and sometimes, the little lines, blah, 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 sometimes they can come in handy for technical analysis, but you can't, well, I'm not saying don't use them, I'm just saying don't base your whole fucking trade idea on them, right? Don't just say, right, if this candle breaks this fucking line, I'm going to drop my money. No, that's not how to fucking trade, guys. You're just flipping a fucking coin in the air, and that's all you're doing. And if you think I'm wrong, because I used to think people were wrong. Right? I'm going to be very open here. I used to fucking trade like that. And I used to see all these people talking about fundamentals, and I'd be like, load of shit. I just use technical analysis. You don't need fundamentals. I draw a stupid fucking line from here to here, and if a candle breaks it, I enter, and I'm making money, so you must be wrong. That's how I used to view fucking trading, guys. So I'm not pointing my finger at any of you. I'm actually sharing my past fucking life, right? And I know that many of you will be doing it. And it's terrible to see if there's nothing worse than trading like that and making fucking money because you're just gonna you're never gonna make any, you're never gonna change your fucking life. You're never gonna achieve your actual full term goals consistently over years upon years upon years by making any big consistent money in doing that, right? You just be kind of break even for years and blah blah blah. Because there will be times where you draw a stupid fucking line down your page and you'll say, oh, this candle breaks, I'm going to trade it. And you trade it and you make money. And it's terrible because you're making your brain, you're giving your brain that reward of making money by doing something fucking stupid, right? And you're just building up that bad habit, guys. I swear to God, I've been there. I've done that. It's fucking horrendous. The best thing I ever done in my life, because every year I'm always looking to improve, right? How do I get better this year? I mean, I've been doing it for almost, you could say, nearly 10 years now. I've been in the trading game and I trade for companies now, blah, blah, blah. But over the years, I keep saying every year, what can I do better next year? What can I do better next year? What can I do better next year? And then one year I was like, do you know what? The only thing left for me to actually learn, because I just haven't fucking bothered my arse to learn it, was fundamentals. That was it. And I used to look at Forex Factory and being like, "Oh, that's green. That must be good. Oh, that's red." Or do you know what else I used to do? I'm sure some of you guys do it. You used to look at a red folder and be like, "Oh, it's red today. I'm not going to bother trading today because there's red news." Right? How many of you are sitting there right now like, "Yeah, I do that. I do that." We've all fucking done it. Right? You don't have to fear red news if you anticipate what's coming based on solid fundamental data and you're backing and you're piecing all those pieces of the puzzle together every single week consistently, because you know in your mind, oh, this, like, I know euros is neutral just now, right? It's not very strong, not very weak, but they are getting really bad numbers. But it's still, as it's a whole, it's kind of neutral, pushing into weak. I mean, you see what's coming up, and so on and so forth. I know that pound is strong. I know Japanese yen is weak. I know Canada is weak. Now, it's been getting a little stronger now. It has been getting stronger now, but overall their economy is still pretty poor, right? So it's like, okay, it is getting better, but do you does that mean it's enough to categorize it as strong yet? You know, so you need to paint all these pictures. And I'm going to show you how to do that, guys, okay? As always. The example I like to give, I'm going to give one more example here. The example I like to give is, right, if you are a banker and you have a $5 billion account and you're just about to place a $500 million trade, right? Are you going to be confident enough to place a $500 million trade, to risk $500 million of your bank's money, which your fucking name is on it, your ass is fucking grass if you fuck it up, you know? Are you going to be confident enough to drop $500 million into the market on any particular pair simply because you've decided to draw a line on your page and a candle has broken that line? Are you now confident enough to drop $500 million in that? Now, if you're not a fucking maniac, the answer to that will be no. Of course, I wouldn't have the balls to fucking do that. Well, of course you wouldn't. Nobody would. So then the second question becomes, if you wouldn't have the balls to drop $500 million just because a candle has broken your stupid fucking line that you drew 2 seconds ago on your page, then the question becomes, why would you do it with your own money? If you have a $1,000 account, why would you do it? If you have a $5,000, $10,000, $100,000 funded account, whatever it may be, right? Why would you do it? If the answer is no to $500 million, then why are you doing it with a $1,000 account? Okay, it's exactly the same thing. It's the same trade. It's the same fucking trade. Doesn't the quantity of money that you have doesn't matter. The trade is exactly the same. You see what I'm saying? So let's move on to the lessons, guys. And what I like to do is I'm very straight to the point. I did try and stop swearing in my videos, and then I thought, fuck it. Yeah, I just enjoy it. Odd. Let's have a look. Okay, so I always do each pair individually, right? Except from Aussie, New Zealand, and China. Sorry if you watch my videos all the time and this is a bit repetitive. I have to say it all the time because I don't know who's watching my videos for the first time, okay? But as you know, I do Aussie, China, and New Zealand all together at the same time because they're all very closely correlated to each other, okay? I'm not going to go on forever about the correlation. It's very simple. When China is doing well, because they do so much business with Australia, if manufacturing is up, cakesin is up, blah, 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 all this other shit is up in China, then it means they're going to be buying more produce from Australia because they get like 80 or 90% of their produce from Australia. Steel, tin, nickel, copper, gold, silver, you know, all this other shit. They get it from Australia. So if China's doing well, it means Australia will also be doing well because they're going to be exporting more goods to China, right? That's how it works. If China's doing shit, they're going to halt buying stuff from Australia, which means all the mining work, you know, slows down and blah, blah, blah. So it has a negative effect on us. If USD is strong, AUD will also be weak. If AUD is weak, USD will be strong. And sorry, did I say that right? AUD is weak. Yeah. If USD is strong, AUD is weak. If USD is weak, AUD will become strong. Okay. Sorry, it was a bit of a tongue twister. Let's see what week are we on. Yeah, okay, it's last week. That's the one we went. So, without any further ado, let's go. Business Services Index. So, as you may or may not know, anything below 50 means bearish. Anything above 50 means bullish. Okay. PPI input quarter on quarter getting better. If we have a look at the graph here quickly, NZD has been slightly growing. Look, and I already knew that in my mind. It's been growing, so it's been doing slightly better. NZD. I mean, it's you wouldn't call it. This is where trading gets a little bit confusing, right? Because personally, I wouldn't call NZD a strong economy because it's not that strong, you know, compared to the US or pound, etc. But it's getting better, right? They are seeing some strength within their economy, you know, which is not to be mixed up with a strong economy because they are seeing strength within their economy. Well, look, it's getting better. So yeah, these are all pretty decent signs for NZD. For once, it's been a long time, you know. GDT price index massively down. What else have we got? M1 leading index is up slightly. 1 year loan is stagnant. 5 year loan prime rate is stagnant. Credit card spending year on year in New Zealand is up. That's a good thing, because if people are spending more money on their credit cards, it means they're spending more money in the economy, right? And if it's good for the economy, then it's good for the currency. Okay. AUD flash manufacturing PMI is up, but so many people. So if you look here, flash manufacturing PMI is up, right? But flash services PMI is down, but they are both bearish. Okay. If you look here, it was previously 47.3, which means manufacturing is getting slightly better. Now, that's probably to do with China's numbers increasing slightly, okay? Which is then pumping that up. But however, it means things are getting better. But just because this number is higher than previous does not mean that it's bullish, right? It is not bullish until it gets past 50. Even if that's 49.9, it's still bearish until it reaches 50 and upwards, okay? So yes, things are getting better, but it's still bearish for AUD. Flash services PMI is worse. It used to be 51, which was bullish, and now it's 49.6, which is bearish. So that's not looking good. What did I have AUD as last week? I think I had it as week anyway, didn't I? Yes, I did have it as week. I'm going to keep AUD as weak. China, obviously, we don't mark down China because we don't trade it. We just like to see the numbers, right? Because it has a knock-on effect on AUD, etc. NZD, right? Let me just have a quick look at last week on NZD, guys, the week before. Because you can't just make, one good week doesn't mean, oh, this currency's suddenly good now. It doesn't mean that, Inflation is really 7. Let's have a look. Let me see. Visa arrivals is down. Sorry, it's up, sorry. Manufacturing down. Yes. We've seen some strength, like I said, right? We've seen strength this week, but I wouldn't call it strong. So I'm going to keep NZD at weak for now. I'm not even going to move it to neutral. Again, this is my personal opinion, right? We all have opinions. And if you look at the banks, guys, if you look at data, like this here, like prime market data, and you look at all these, hold on, I'll show you. And you look at all these the banking notes, the info on the banks. They all have a different opinion, guys. You look at what is it fucking called again? CIMB or something. They'll have something else. Where are we? Let's see the banks. Wells Fargo will have a different opinion from UniCredit. UniCredit will have a different opinion from JP Morgan. JP Morgan will have a different opinion from MUFG. MUFG. So it's all a thing. But this is my opinion. Let's have a look at what we've got coming up next week. Retail sale. So when it comes to the news, right? When it comes to month on month, M&M just means month on month, right? Q and Q means quarter on quarter. Y and Y means year on year, right? So you can kind of gauge month on month will show you short term movement. Like if it's good news, you'll see like one candle flying while the news comes. Like if it's a red folder, I mean, not really this at all. But if it's a red folder, right, and it was month on month and it's good news, you just kind of see, the candle flying. If you're a scalper, that's probably good news for you. But we don't really care as swing traders because it's only going to affect that day. It's not really going to affect the whole, as a whole, right? Quarter on quarter, we like to see because that's moderately strong. And then year on year is the one that we really want to see because that's over the longer time period, right? And that's real strength if it's year on year. That shows you that if it's grown since last year, that shows you real economic growth as opposed to, oh, this month was better than last month. You know what I mean? Year on year shows you real economic growth. So does quarter on quarter, I guess. But yeah, year on year is the one we really want to see. So next week, excuse me, we've got retail sales month on month, job advertisements. Yep, we want to see that. Building approvals. Yep, company operating profits, cakes and manufacturing. Yep, we've got a lot of news that we want to see. I don't know why these aren't red because they are quite important for us. Commodity prices year on year, GDP quarter on quarter, cakes and services, goods trade balance, US denominated trade balance. Yeah, okay. So we've got a fair bit of news next week that we want to see. Okay, So let's just move on now. And this video starts to get quicker now. The beginnings kind of drags out a little bit, I know. I do my best not to, but at the same time, I like to give you guys examples, right? And I like to have a bit of a conversation with you first before we do this. So let's see. Canadian dollar. It's been actually doing quite well recently, you know. I think I had that as strong last week, did I? Let me just check. I had it as weak. I remember now, sorry. I had it as weak with the potential because we've had 2 weeks of good news. So I had it as weak. And I actually said last week, I remember now, that if we continue to see positive news, then I'll shift it into strong, which we are seeing. So yeah, let's have a look. Housing stats up. Foreign security purchases up. CPI month on month up. Median CPI year on year up. Trim CPI year on year up. Common CPI year on year up. Fucking fantastic. Core CPI. So they may increase rates at some point if numbers keep going up. You see down here, we've got the central bank rates. Canada's at 3.75. They might need to increase rates at some point because you can't cut rates when numbers are coming in strong, right? You can only cut rates when numbers are low. If you cut rates when everything's coming in strong, it will send inflation through the fucking roof. You know, I mean, look at Venezuela just now. They're literally filling skips, big metal skips full of their currency because it's actually worth fucking nothing, you know, because inflation's so bad. Let's have a look here. That's really good for Canada. Numbers are up. Yeah, fucking fantastic. Absolutely fantastic. Let's have a look at next week, what news we've got coming. GDP month on month, current account. Okay, so we don't really have big news for Canada. I am now moving Canada over to strong for now. That is fantastic. Now, we've had a good few weeks now of Canada being strong, right? So whenever you get good, numbers, you don't want to be like instantly changing it from weak to strong because there's a cycle. Things go from weak to neutral to strong, from strong to neutral to weak, blah, blah, blah. But Canada's been giving us good numbers for a couple of weeks now, which is now, pulling into strong. So yeah, that's looking really good. Happy with that. Let's move on. CHF, you don't normally get much news here, but we have to check it regardless, right? Trade balance is up. So trade balance refers to the differences between how much a country exports and imports, right? So if the trade balance is high, it usually means that's a surplus, right? You get a surplus and a deficit. So if a country is exporting more than it's importing, then you get a surplus, which is good. If a country is importing more than it is exporting and the numbers are low, then you get a deficit, right? Obviously, a deficit is negative for the currency and a surplus is positive for the currency, okay? Next week, what we got? Let's have a look. GDP quarter on quarter. Yeah, okay, we'll have a look at that. Look, I mean, I'm never really bothered with CHF. CHF is always a safe haven currency, right? It's always safe haven. I usually always just place it in kind of neutral, but I'll potentially, yeah. In fact, it's always a hard one for me. CHF, it really is. Nothing's ever black and white because it's always very stable. It's never really peaking and it's never really dipping. It's always very stable. Sorry, let me just fill up my yerba mate. This is incredible, by the way, guys. So this is a tea from South America. This method, I believe, is more Argentinian. Phenomenal. This is 100 million times better than coffee, guys. I swear to God. I used to drink coffee. I used to get jitters. I used to fucking need to shit my pants 20 times. I used to, what do you call it? Get have a feeling of anxiety and all that, And it was just coffee. I don't even have anxiety. It was just a fucking coffee. And then what happens is if you have a coffee at like 10 in the morning, you need another coffee by 12 in a day because then you start crashing, right? See this tea, yerba mate? Absolutely incredible. It gives you this really slow release caffeine all through the day. One of these in the morning sets you up for the entire day. Honestly, you get a great sleep. You don't get jitters. You don't get a crash. If you have this before the gym or before you go for a run, oh my God, it's insane. It's the best pre-workout on the planet. Highly recommend you guys check out Yerba Mate. It is phenomenal. Let's see what we've got here. Euro. German, but okay. Trade balance is good for the euro. Current account is good. Current account, when the current account goes up, that's basically showing that more people are spending money in their own country, which brings the current account up, okay? Which is a good thing, right? If people are spending more money in their own country and the current account's coming up, it means the economy is being stimulated, right? So it's positive. Final core CPI is sticky. Final CPI sticky, so there's no real growth. So that's why I'm saying it's kind of between weak and neutral, right? What did I have it last week? Let's have a quick look. Yeah, I had it in neutral last week, yeah. Let's have a look. German PPI month on month it's up. So PPI, why PPI is important? CPI and PPI are both important, okay? CPI is every month, quarter, and year. What they'll do is they'll buy a basket of goods from your local supermarket. So maybe if you're in the UK, it's going to be Asda, Tesco. I don't know what it would be in Germany, but if you're in America, it's going to be Walmart. You know what I mean? Basically, your shop, your grocery store, right? One of the main ones. And they'll go and they'll buy a basket of products, toothpaste, you know, a what do you call it? A bloody portion of grapes, you know, a bag of banana, a bunch of bananas, sugar, butter, a litre of milk, you know, 12 eggs, you know, all this kind of shit. And they'll buy it each month. And then if it's more expensive, you know, the following month, and then obviously compared to the last year as well, then that shows inflation, right? Things are becoming more expensive. That's inflation. And then PPI is pretty much the same thing, but instead of being for the consumer, i.e. CPI, Consumer Price Index, it's PPI. PPI is actually for companies. So if you're a company that makes, you know, this kind of fucking shelf, you know, you've got to buy these products, right? You've got to buy the wood in order to make the product for the end consumer, right? So PPI, if that's going up, it means that buying all these parts are more expensive for the company. And then if buying in, you know, the basic wood before they start turning it into an actual cupboard, you know, shelves and stuff, then of course they're going to increase their prices for the consumer. So if PPI is high, you can actually tell right away that probably, or most definitely, CPI is also going to be higher because they're going to pass that higher cost on to the consumer, right? They're not going to take that from their profits, okay? So that's why PPI and CPI are important, and that's how you can tell if CPI is going to be higher simply by looking at PPI, okay? Excuse me, guys. When it comes to euro, if there's like Spanish year on year or Italian year on year, yes, we like to see it. But when it comes to euro, the only two that you really care about is France and Germany, right? Because they're the massive countries. They're the ones that really have the power to sway things, you know, higher or lower. Flash manufacturing PMI is dog shit. French flash services, dog shit, so it's bearish. Oh God, bearish. So yeah, for me, I am now moving euro this week from neutral last week back over into weak because we've had a good few weeks now. Excuse me, of weak data on the euro, so I'm now putting euro in weak. Next week, what have we got? We've got German prelim CPI month on month, Spanish flash. Yeah, we want to see that. Private loans year on year. Yeah, we want to see that because if the bank are giving out more loans, it means people are getting more money, right? And if people are getting more money, they're going to spend that money. So that's a good thing. If they're not giving out more loans, it means people aren't spending the money, which is a bad thing for the economy. Pardon me, guys. German import prices, French consumer spending. Yeah, we want to see that. French final payrolls. Yeah, so core CPI. Yeah, we've got a lot of news next week that we want to see for euro. Okay, but the bottom line is euro is weak. GBP. let's see. Rightmove HPI is down. So Rightmove HPI is how many people were kind of granted a mortgages approvals, right? And obviously, if that's high, then it means more people got mortgages. What is a mortgage? It's a fucking loan, right, from the bank. So when that's high, it's like that's why it's a good thing, right? But as you can see, it's a yellow folder. It's not the be all and end all. It's just a little nicety, for you. That's all. It's not anything major. Pardon me. Look at pound. It's just a fucking powerhouse. Bullish, bullish. That is bullish. So this is the thing that I don't like about Forex Factory. If people don't know how to read this properly, they will see that that's red, right? And they'll be like, "Oh, that's bearish." No, it's not bearish. Look at it's 0.1. What was it at previously? Look, previous. It was minus 0.5%, right? So now it's 0.1. That's bullish. That's increased. So that's bullish. So why is it red? Well, it's red because they forecasted it to be higher. They forecasted it to come in at 0.5, and it simply came in less than they forecasted it. So that's why Forex Factory paints it red, okay? Which I don't think is right, because if people don't know how to read it, they're just going to look at colors and be like, good, good, bad, bad, and it's not bad. It's a good thing because it's higher than before, okay? So don't let that catch you out. So that's bullish, 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 bullish. Public sector net borrowing, that's bearish. That means the government are borrowing more money, so that's not good, or spending more of the taxpayers' money, I should say. Industrial order expectations, that's also bullish. We don't really care about that because we're not an industrial manufacturing country. The UK is a services country, although every country has both. One will always be predominantly manufacturing and services, right? So for example, the UK has manufacturing and services, PMI, right? But our manufacturing is always expected to be low because we're not a manufacturing country, but our services is always expected to be high because we're a services country, right? Same with France. France is exactly the same. But with Germany, it's the opposite. We always expect Germany manufacturing to be high and services to be low, right? Because Germany is predominantly a manufacturing country. Same with Japan. Retail sales month on month is down. Flash manufacturing PMI is down. And and that's bearish. And flash services PMI is down. However, that is actually still bullish for now because we might come back next week and it jumps back up to 51 or something, right? It's still 50, so it's still bullish, but it is decreasing, right? So what can we maybe anticipate for next month? Lower numbers, because next month is Christmas, right? Things are going to slow down. People are going to slow down manufacturing and stuff because they're going to be on holiday at Christmas, blah, blah, blah. So what can you anticipate? Germany. December and January's numbers are potentially going to be low because we're going to slow down in the run up to Christmas, right? Obviously, orders and stuff go out, but manufacturing and stuff is going to come down. So orders are going to slow down in the run up to Christmas, right? So that will show in December's numbers. Then everyone's going to be in holiday, Christmas holiday, New Year's holiday, blah, 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 and things are going to slowly pick back up in December. That's going to show in January's numbers, not December's numbers, right? So January's numbers are going to be pretty shit. And then you may see a slight increase again when we come into February, when the world starts coming back around, okay? So that's how you can kind of, I don't want to say predict the market, but how you can kind of have a perception of, you can have a forecast, exactly like these guys do, of how it's going to come out, right? So for me right now, guys, pound is still strong. Obviously, if all these numbers start coming, bad, then yeah, we need to change that. But for me, pound is still pretty strong, guys. Pardon me. Let's have a look. Pound is just a fucking powerhouse right now. It's definitely not weak. BRC short price index. Okay, not much. We don't really have any news next week, okay, for pound. So pound is strong. What have we got next? Japanese yen. 2 more to go, guys. Japanese yen and USD, so bear with me. I will be as quick as I can, all right? Bank of Japan, core machinery orders is down. Sorry, it's up. It's up. Sorry, my bad. But I mean, it's still shit, right? Still minus 0.7. It's red because they anticipated it to be 1.4 and it came in at 0.7. However, It is it is higher than previous, right? Trade balance. Yeah, it's shit. National core CPI is shit. So why is it green if it's shit? Because look, they forecasted it to be even worse. They forecasted it to come in at 2.2, and it came in better than forecasted, right? But it's still shit because it was previously 2.4, so it's even worse than before. And flash manufacturing PMI, we want to see that high. It's getting worse for Japan. Japan is in a pretty bad way and has been in a bad way for the last couple of years. It just can't, since COVID, it just can't fucking break out of being in a hurt locker. So yeah, Japanese yen is weak for me. Now, if you look at pound yen, if you look at USD Japanese yen, and you're like, well, that was going down, USD yen was going down, so that means yen strong. No, that's simply the Bank of Japan intervening. So what you want to be doing is you want to be letting the Bank of Japan intervene. Don't take that fucking trade. Just let them intervene. Pull it straight back down to an area of value, right? You can use your Fibonacci retracement, the 618 or the 786, whatever you want to do, however you mark up your technicals. And then once it hits those areas, you're then going to enter the buy because all it's going to do is the Bank of Japan is just going to intervene. It's going to have a very short term effect on the market, and then the real effect is going to kick in by the fundamentals because the USD is way overpowering. The Japanese yen's still going to be fucked at the end of the intervention, so it's going to go up, right? So just ignore the down when the Bank of Japan intervene. Don't be, oh, I'm going to take this, I'm going to take it down, and I'm going to take it up. Just take the best fucking trades. Don't chase the market all over. Japanese yen. SPPY year on year. Yeah, we want to see that. Bank of Japan core CPI year on year. Yep, we want to see that. Tokyo core CPI, want to see that. Unemployment rate. Yep. Sorry, I'm just trying to focus. And bloody two of these. Retail sales, consumer confidence, housing stats. Yeah, so we've got a lot of big news next week that we want to see. I don't know why they're all yellow because they're all very important. We want to see them for the Japanese yen. However, it isn't going to really affect, right? Even if they came in good, that does not mean, Japanese yen's now strong, right? You need weeks and even months of data. You need inflation to come up and all this, for it to then become good, okay? So Japanese yen is shit. It's weak. Last but by no means least, as we know, the USD is a powerhouse yet again, and the Fed may even need to increase rates. They may need to increase interest rates again. None of this cutting bullshit. They may cut, but like I said, you cannot cut rates when numbers are strong. You can only cut rates into weak numbers, and numbers are pretty fucking good right now. So let's go through them. Housing market up. Long-term purchases up massively. Fucking more than double. Oh, it is double, sorry. Building permits down, but it's still good numbers. Housing stats, okay, down slightly. Crude oil inventories, yeah, that's why oil's getting this range. It keeps jumping to being in surplus and down. So I love trading oil, but I haven't traded it maybe the last 3-4 weeks because it's just in this really horrible range. For me, oil is bearish, right? It's very bearish, but we can't take sells right now. We have to wait for it to push up into an area of value for us to sell from, right? If we sell it just now, there's no value to sell from there, okay? And you decrease your probability of having a good return, and you increase your probability of risk, okay? Because there's a high chance it's going to pull back first to value and then drop. So you're increasing your risk and decreasing your probability of making a return, which you don't want to do, right? You want to be doing the opposite of that, increasing the probability of getting a good return and decreasing the risk, okay? Unemployment claims, good. Fed, Philly manufacturing, not so good. So this is kind of what we would call mixed data. Existing home sales, good. CV leading index, not so good. Natural gas, who cares? Flash manufacturing PMI. Oh, excuse me. Sorry, I ran 10 miles this morning with like a 20 kilogram backpack. We have a thing in Jakarta called Car Free Day, where through like 20 kilometers of the whole city, there's no cars allowed from like 4 a.m. until 10 a.m. It's actually really good. And the whole fucking city comes out and runs together. And I was running with like my old army backpack, like 20 kilograms, fucking smashed out a 10 miler, so I'm knackered now. Flash manufacturing PMI is still bearish, but you can see like things are getting better, right? That'll be to do with Trump getting in. Flash services PMI is bullish and still and getting even better. Revised consumer sentiment is down, and revised inflation expectations is the same. What we got next week? But you can see the USD is flying, guys. If you look on the charts, like the indices and all that, the US 500, US 100, blah blah blah, they're fucking flying. Next week, what have we got? Unemployment claims, prelim GDP. I want to see that. PCE, I want to see that. Yeah, we've got some decent news next week that we want to have a look at, right, to confirm stronger week. But yeah, for me, USD, it's still strong just now, guys. Still very strong. The market sentiment right now. You get two sentiments, right? Risk on, risk off. Now, markets 98% of the time will always be risk on, right? Markets are always risk on because people are always taking risk to make money, right? That's what risk on means. When they become risk off is when there is a new war, and so when Russia first kicked off the Ukraine, you saw gold and everything flying, right? And USD melting. People will say, oh, if USD melts, gold flies. It's actually got fuck all to do with that. It's to do with the risk sentiment. So when people are like, oh shit, there's a new war and they don't know what's going to happen, they're less willing to take risk. So when it's risk on, they're willing to put their money in USD and all these other risk on Bitcoin, all this other shit. But when it's risk off, people are like, oh shit, how is America going to respond to this new war in Ukraine? So everybody shits themselves and takes the money from USD and puts it into something which is less risk. What is that? Gold, because gold is all solid. That's why USD melts when gold flies. That's the reason behind it, because people are simply moving that wealth from the USD into something into something more safe haven, sorry. NZD will go up, CHF will go up, Japanese yen is actually a risk-off currency, believe it or not, because it is quite safe, even though it's shit, it's quite safe. So, yeah, when it's risk on, people will put their money at USD. Now, when a new war kicks off like that, right, markets will only be risk off for about, 4 or 5 days, a week, and then even if the war continues, like we've seen with Russia and Ukraine, then markets will just continue to be risk on because everyone's like, okay, this is the new normal, right? So then what else happens? Like now, when we've got all this nuclear war shite kicking off now, we're firing missiles from the US and all this kind of shit. Even though it's the same war, it's taking another fucking step forward, right, into the unknown. Like, oh fuck, are they actually going to start firing nukes? Like smaller nukes. It's not going to be the nukes that wipe out entire areas, but I believe that they have like smaller nuclear warheads which will wipe out, large fucking areas, like the Russians will fire and blah blah blah. So that then takes the war to a whole different, what the fuck's going to happen now? Again, it's not normal anymore, right? So markets will quickly jump back to risk off, and you'll see gold flying and stuff. Okay. So yeah, that's basically how it works, guys. So when people say, "Oh yeah, when USD melts, gold flies," it's actually got fuck all to do with that. It's to do with the sentiment of the market being risk on or risk off. Because you'll notice there's plenty of times during this year, especially, where USD is flying, and you look at gold, and gold is also flying, right? Because the sentiment is risk on, so people are putting money in both, and that's why that is. Okay, in case you're confused. That is it, guys. So, to summarize, and let's get moving with the markups on the charts. Strong, Canada, GBP, USD. Okay, weak, AUD, NZD, Euro, Japan. Neutral, Swiss franc. Okay, now what you do is you just go like that, score out Swiss franc, we don't care. And now you want to be looking to trade, CAD Euro, CAD Japanese yen, pound NZD, pound AUD, pound Japanese yen, USD Japanese yen, pound Euro, USD Euro, USD, NZD, blah, blah, blah. You get the picture, right? So that's all you do. You just you trade a strong economy against a weak economy. That's how you know if you're looking for buys or sells. And that's what the banks do, guys. I'm not one of these guys that's like, I trade like the banks. That's what the fucking banks do. They look at fundamental data. Let's have a look. Now, I also use this. This is I'll make this a little bit smaller. Hold on. There we go. I also use this, guys. It's called Prime Market Terminal. You'll see it. There's a link for it and a discount down the bottom if you want to use it. This is phenomenal, right? I'll give you a quick tour. So let's just look at up here, GBP CHF. Now, let's say, in fact, I won't do GBP CHF. Yeah, I will, fuck it. No, it's a pretty shit pair. It's pretty flat. So let's not do that one. Let me show you a different pair. GJ, because we know that we should be buying it, right? Now, you don't have to use all of these, right? So the overview is bullish, okay? Then I like to look at seasonality, DXM, which is Dumb Money Index, which is retail traders, and then COT. COT is essentially the banks, right? It tells you what the banks are in. Now, how do we know that? Because by law, every single Wednesday, every single bank, instant trading institution, JP Morgan, Wells Fargo, fucking Barclays, you name it, they must submit the trades that they're in every single Wednesday to like the SEC and the FCA and so on, right? Their regulatory board. It's to try and prevent insider trading, right? So they're required to do it by law. And then every Thursday, those trades get verified. And then every Friday, that data gets published. Anyone can see it. When you see the data raw, it's actually quite hard for us to understand it. You'd be like, what the fuck is this? It looks like an old kind of, SOS type fax thing. It's pretty weird. So systems like this, websites like this, like Prime Market Terminal, they basically combine all that data together and make it so that you can see it very easily. Okay. So not much here. It's still bullish, and this tells you seasonally. So seasonality, I quite like. It takes data from the last 5, 10, and 15 years, right? And it says seasonally, on these months, is it a buy or a sell? And over the last 5 to 15 years, this is always sells, and this is always buys in December, which is quite good to know. We also want to be doing the opposite of what retail traders do, right? Look, if you look down here, 76.9% of all traders lose money with this provider, which essentially means 77% of traders, retail traders, lose their fucking money. So you don't want to be in line with them, right? Now, if these are in line with COT, that's fine, okay? As long as you're in line with COT, commitment of traders, the banks, basically, okay? As long as you're in line with them, that's fine. But what you normally find, and it's fantastic, is look, the banks are all in buys, while retailers are all in sells. So let me put it to you this way. If every single retail trader on the planet had an account large enough so that our stop loss was $200,000 and we all placed a trade at the exact same time on the exact same pair, we still do not have enough capital to move the market in any way, shape, or form, right? That's the enormity of this. So who's the people that does have the capital enough to move the market? It's the banks. So you want to be doing the opposite of retailers. They're all in sales, and you want to be following the banks who are all in buys. Now, I know you can see here, you'd be like, well, look, 75% is buys and 25% longs. That's because banks trade very differently from you and I. Like when you and I place a trade, we'll trade 0.5%, 1/4%, 1%, 2% per trade, and we have 99% of our accounts safe, right? Banks don't do that. All these big institutions, when they're trading, they have 100% of their funds in the market at all times. So they do what's called hedging. So whenever they're in a trade, they never go 100% in. They have 100% of their funds in, but they never go 100% in on one way. So they'll put 75% in buys because they think it's a buy, and 25% in sales just in case the Bank of Japan intervenes and something crazy happens. Then they'll make money on the way down and it doesn't blow their accounts, right? That's how the banks trade. They trade very differently from us. So that's why you get the 75% in one way and 25% the other, or whatever it's going to be. You can see here, look, since last week, the banks have they have increased their net positions. So that's a good, so we want to be looking to buy, right? And if you come across here, GG, let's have a look. I like to use the daily. There, look, I already had that marked out. Look, this is already one of my fucking areas for entry. Did I get rid of that bloody thing? There we go, look. Small candle, large engulfing. Once that's broken, comes back, retest this small area here, this zone. That's your entry. Look, I already had this marked up. Boom, 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 boom. So I'm pretty much retesting on the 200 EMA. I'm probably going to be entering this on Monday, okay? So I'm going to write down buys. GJ. There we go. I'll write down sells. And while we're now here and we're off of Prime Market Terminal, let's have a look and let's have a look at all pairs. AUD CAD. No. I've got CAD, yeah. So I've got CAD as strong now and AUD as weak. So what we need to see, guys, is this. We need to see this breakdown, come back up, retest, reject. So this right here, small candle, large engulfing. We're potentially, if you're looking for buys, you're looking for the retest here and go. But I do not think that's what's going to happen. I think what's going to happen is this. This is going to break down here. This is going to come back up right there. It's going to retest this zone. Then we're going to enter, right? That's our entry right here. Okay, let me just move this out of the way. That's our entry right here. Do not enter on the passing because it could just then fly after that. You need the confirmation, right? Break below. It must break below this, the previous support. Once the previous support is broken, it becomes the new supply. Bang, bang. That's what we're looking to see, guys. Okay, so yeah, sells AUD CAD for next week. Let me change that to red. Boom. What have I got AUD as? Yeah, I've got AUD as weak. I've got CHF as neutral, but look, yeah, so this is already panned out, so I'm going to close this off. I'm going to delete this. This is already a thing we did out ages ago. This is already, look, they've all fucking panned out. They've all panned out. So looking to sell that here. AUD CHF. We've got quite a lot of potential trades lining up. I know CHF is down as neutral. I know that. But it's always far stronger than AUD, right? I might not take it because, look, it's just a big, horrible, shitty range, but you could potentially get a good trade out of this. So I will take this one by ear, right? I'll play it by ear and see what happens. AUD Japanese yen. Yeah, both are weak, so I think you're just going to get more of a range, right? And please remember, all Japanese yen pairs are subject to Bank of Japan interference right now because they keep talking about, we're going to do this, we're going to do that. So please be aware of that, all right? AUD USD, I marked this up, as you can see. If you watched my last video, you see we already, when the markets were here, we already marked this up, right? I just missed it. The reason why I missed it is, look, you've just got one candle up and one candle instantly down. What I was looking for was more of a this, candle, 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 and then down, right? And we just got a bang, fuck off. So I missed it, okay? But again, it's good to see, look, this one came in. This one came in. They all come in, right? Why? Because it's areas of value. How do you spot areas of value? Well, you use the Fibonacci to determine if it's a 618 or 786. And for your entry, this is on the daily, right? Look, all you're looking for, guys, is that a small candle, a large fucking engulfing. You mark up the small candle with the box. Now, what you're looking for is if the market comes back and retests this area here and rejects, then you enter it, right? If it breaks below this area, then what's going to happen? I'll fucking guarantee you what it's going to do is it's going to come back, retest this zone, and then melt, because when the previous support has been broken, it becomes the new resistance. When the previous resistance has been broken, it becomes the new support. And you don't need to believe me. You can go away and fucking, what do you call it? Try this out as often as you like. You can back test this as often as you like. And I'm telling you, you're going to be sitting in front of your screen like, how the fuck did I not notice this before? Because it's so blatantly obvious. It's fucking unbelievable, right? And obviously, when you incorporate that with technical analysis, then you already knew last week USD is stronger than AUD. So we know we're looking for sales. So we're already anticipating this is going to break down, come back up, retest, reject, and go, right? That's how you do it. It's phenomenal. Let's see. Right, Euro. Now, look, isn't it funny that Euro... Oh, Euro is weak now, yeah, and AUD is weak, so I'm not going to bother trading this. But what you'll probably see, guys, is you'll probably get... you'll either get strong news from Euro here, right, which then pulls it back up. Because even if you didn't have fundamentals, this is now a very good area of value to buy from, right? But I just wouldn't entertain this trade because both of them are shit. You know, both economies are really shit right now. I think the highest probability is actually going to be that we'll get stronger news. I'm going to remove this and I'll just do another one. We will get stronger news from AUD than we will Euro, and it'll do this bang, 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 right? That's what I believe. Because why? Yeah, it's good to explain why, right? Aussie, China's numbers are getting better just now. Special run up to Christmas, manufacturing will increase, blah, blah, blah. So then Aussie will increase, right? So I think we're going to see something more like this. Bang, bang, bang. However, you know, it may come here, retest, reject, and go, right? So we just have to be aware of that. EuroCAD, excuse me, look at that, look. There it is. We already anticipate. I actually closed this trade out here. I fucking closed it here, and look, it melted. Prime, that was one of my trades last week. I closed it out in profit, but I closed it out at this second candle at this major area. I should have just let the fucking thing run. Look, it melted. It freaking melted. But look, here's another one. Look, support, support, support. Once that support is broken, it becomes the new resistance. Bang, bang. Right? Time. And I don't know how many times I have to show you this, guys, for you to be like, fucking hell, this guy's right. I'm telling you, go away and try it, right? That was another winning trade for the group. What are we on here? Right, so look at that. We are in a phenomenal area to buy Euro CHF. Oh, sorry, I'm talking shit. Oh, I wouldn't be buying it. So, yes, okay. In terms of value, we are in a phenomenal area to buy Euro CHF, right? But Euro is so shit right now. I just wouldn't buy it. I would not buy this. You're really looking for sales. This is already panned out for ages ago. You're really looking for sales. Now, on the flip side of that, you can't sell from here. You cannot sell from here because there's no value to sell from, right? You can't sell into a fucking all-time low, right? Unless you're absolutely off your nut. So what you need it to come here, minimum, to then take that down, right? Or you are waiting for this to happen. Boom, boom, break below, cut, retest, and reject. So this is your entry on the break and retest, right? Or that's your entry. That's your only two entries, right? That's it. What is that? What pair is that on? Euro Swiss. Okay, there we are. Euro Japanese yen. Look, it's fucking doing it. It's fucking doing it. There we go. Waiting for it to hit this zone, this small candle, large engulfing, Bank of Japan intervention. Fucking hell, it's like we know what we're doing here, isn't it? And away we fucking go, right? That's what we're waiting for. I would like to see it retest a little bit deeper and then bang. So, Euro, EJ, potential buys next week. Euro NZD, yeah, both of them are weak, so I'm not even going to entertain this pair. However, look, what you will potentially see is this, right? Look, it's broken below that area, broke below, retest, reject, and melt, okay? So you're probably still going to see that. Because actually, NZD numbers has come in stronger than Euro. So you will, I could pretty much say you will see that. You'll see this breakdown, come up, retest, reject, and then melt, right? It's just not a very good trade. It's not a very good currency pair either. It's one of those currency pairs that you enter it, and a week later, you look at your chart and it looks as if, wow, fucking hell, it's melted. And then you check how much money you've made, and you've made about £20, and you're like, this is fucking pointless, It's just one of those really shit pairs. And I believe it's an exotic as well, it's classed as exotic, so your spread fee is going to be really shit on that, okay? So I won't bother. But if you want to take it, then you can use this markup, right? GBP AUD buys. I'm going to mark up this small candle, large weight engulfing, wait for it to come back, retest. You need to wait for the candle to retest and reject in your favor, because it could. Here's an even look down here. You see that? Look, small candle, large engulfing. This is an even better area of value down here. So you need the confirmation first, right? Will it come down here? I doubt it, because you would need very strong AUD, which right now we don't have, okay? So let me just get rid of this and tidy up a little bit. Sorry. 2 seconds. Clean up. And we don't need this because we're already away from there. Remove. Okay, I like to tidy things up. Let's move this up here now. So there we go. Look, it's as simple as this, guys. This is your entry, or this is your entry for buys only, because fundamentally it's buys. This is your, this one here is your TP1. This is your TP2. That's it. It's as simple as fucking that. Your stop loss will be below here, right? And obviously, if you're entering here and you can put your stop loss there if you wish. I just don't. I like to keep it a bit further, because you might it'll pull up, then it'll give you a liquidity grab, and then it'll go, right? Because it knows market makers can't see your stop loss, but they know that every fucking monkey on the planet trading retail is putting their stop loss, a nice tight stop loss, behind the previous low, which is right here. So you want to put yours, in an area where they don't want that takes a lot of money for them to come all the way down and grab your stop loss, right? And fundamentals doesn't support that. So there you go. So this is buys. Fucking really good opportunities this week, guys. GBPAUD. I like it. GBP CAD. CAD is strong and pound is strong. So look, that was me just highlighting that before. Now this is broken, right? Same again. You're going to get the retest, melt. You could get that here. So wait, I'll just do this. It never broke the top. You will get, it's already broken, right? Bish, bash, bosh, right? So that's your end. It might just melt and you don't get that entry, right? So if you're thinking, well, what if it doesn't pull back and it just melts? Well, you've missed the trade. That's it. Don't try and chase the fucking thing. You don't want to be selling into into a low, right? Not an all-time low, sorry. You don't want to be selling into a low. Here's a resistance. Here's a support. Well, it is a resistance, right? It's a resistance zone. It's a support. And here's a support. You don't want to be trading into that. You need it to break back and then melt down, okay? If pound continues to be strong, then it's as simple as this, guys. We are simply, look at that. Look at what it's done. Boom, it's retesting our zone here. So we're either bish, bash, bosh, right? Let's move that over. Or, of course, you're going to get this. Bish, bash, bosh, right? Move that over again. I know it's awkward to put all these on for you, but I got rid of that yellow line because it's fucking annoying, isn't it? There we go. So that's our areas. Let me see, pound. Oh, this is a hard one because both are strong. I don't like to trade strong against strong or weak against weak. Pound is, of course, much stronger. I know both of them you would categorize them as strong, right, given good numbers, but pound is much stronger than the Canadian economy. So, yeah, let's just play it by ear, okay? But I prefer buys on this, okay? I prefer buys, but I'm willing to look at all options, right? GBP CAD for buys. Man, so many fucking opportunities this week. So you see, with my method, sometimes you're waiting weeks, right, to get an opportunity, and then there's other weeks. I mean, we've got 1, 2, 3, 4, 5, 6 opportunities so far, and last week I took about 8 trades. So it comes and goes. Same again. Look, boom, small candle, large engulfing, mark up the zone, comes back for the retest and goes. That's pretty shit. I'm not going to trade that. It's just a big range, right? We really want it to break out of this range or break above this range, but I'm not going to trade that range anymore, I don't think. GJ. Again, here we've got a zone here. We do have another zone down here. I've just marked it up with the green thingy, the green line, because if you put too many, like if you put too many of these, like it just becomes kind of messy, right? I mean, you could, I guess, but pound yen is buys, guys, right? It's buys. You just need to be very careful right now because the Bank of Japan keep talking about we need to intervene because the yen is fucked. So they are going to intervene, and that's what gives you these big moves here, right? We like these big moves, but you don't need to trade them. If you wish, if you want, you can, right? I just wouldn't recommend it because you're still, even though it's melting, you're still going against fundamentals, right? What's this? Pound NZD. I'm going to ignore that because both are showing good numbers. GBP USD. Look, here we go. So it's either going to come here and go or break, retest, and go. I also bloody missed that because it was a one candle, 1, 2, 3. I was expecting more of a, boom, 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 and then drop. Then I was going to take it. But look, it was literally one candle. Bang, bang, bang. Away it goes. And I freaking missed it, okay? My bad. However, we can now see we are potentially looking to. This will be a freaking great area to buy from, right? Great area to buy from, but we've still got a long way to go. So let's have a look. Let's have a look at potential buys. Obviously, if we're going to look, let me just clean that up because we don't need it anymore. If we're going to look at sales, then you need the market to break below, come back up, and boom, right? And that's going to be your entry. So yeah, it's more likely, we're buys for now, so I'm going to change this. There we go. GBPUSD. But even though I'm putting it down in the category of buys, in my mind, I know that I'm open, right? I'm kind of neutral. I'm just going to wait and see what the market gives us, okay? Because both of them are doing really well just now. It could be buys or sales. We just have to wait and see what the market gives us. Look again. Boom, boom. I will tidy this up now because these are all old. Here's the thing. NZD USD. So, I mean, in terms of value, right, this is phenomenal value to buy from. But then you're buying against fundamentals, right? Because the NZD is pretty shit and USD is phenomenal. Does that mean that it's not going to start rising up? It absolutely could rise up, and that's only because of areas of value, right? So I'll keep that one here. Now, if you look across here, you see the small candle, large engulfing, right? You still mark that up because see now that this has been broken, it now becomes, you've got the initial retest and reject, right? It now becomes the new resistance. So what you'll find is market will go like this. Boom, 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 boom. You potentially get a move like that. Okay. So if it doesn't and it just instantly breaks down, you're still going to get this. So your entry's still going to be at this retest of the bottom zone, or your entry for a sell is going to be here, okay? But you are not looking for buys on this, sells only, right? So if this ends up coming up to here, don't be saying to yourself, "Oh, I knew I should have taken a buy." No, you don't know that. Stick to the fundamental bias, okay? This may come to here. Even better if it does, and then melt. So I'll just mark it up. Boom, 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 right? That's what we're looking for. Entry here, here, or here. 3 possible entry points. That is it. So NZDUSD. Anything the market does outside of this area, or this area, we do not give a shit. So don't be chasing your charts all around the fucking page. You only care about when the market hits those zones, right? That's it. Look, same again, look. This was our area of rejection, rejected initially, then it was broken, right? Like, it was broken. Once the area of support is broken, small candle, large engulfing. Once you see this, guys, you can't fucking unsee it. Small candle, large engulfing, you mark up the small candle, drag it across, that's your area of resistance. However, once it's broken, it becomes the new, that's your area of support, Once it's broken, it becomes the new resistance. Boom, boom. we've literally saw that 5 times now, maybe even more than that in this one example alone. And every single week you see the exact same thing, right? So I've got Canada strong and NZD as weak. So we are looking for sells, but you cannot sell from here because there's no value to sell, right? You'll probably see that it will rise from here. It will reject here and rise, start coming up. You don't want to be buying it, okay? We want to be selling it, so you just want to be waiting for this. Bang, 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 okay? That's it. I'm not going to write that down in my notes because it's still got a long way to go. This is the daily time frame, remember. Still got a long way to go, so I'm just going to ignore it, all right? NZDC, yeah, dog shit. I'm not going to touch that. It would be sales from up here, but I'm not going to touch it. USD CAD. We did enter a buy last week on this, and I closed it out in a very small profit just because it was like, it got up to here, started coming back down. I'd like to see it kind of retest this zone or even this zone and then go. It's definitely buys. You'd never sell this pair in a million years. We just have to be a little cautious, okay? So I'll put it down just to keep my eye on it, right? But it's not a trade yet that I'm really going to be pouncing on because we do need a retracement, right? We do need it to come back down to an area of value. Look at this, look, boom, 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 done. Look, breaks above, retests, and goes. Look, there it is. Boom, 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 boom. It's not, I don't have a crystal ball, guys. It's just fucking years on the market noticing these little golden nuggets. Once the previous resistance is broken, it becomes the new support. Resistance broken, support, away it goes. Resistance broken, support, bang, away it goes. Resistance broken, support, away it goes. Sometimes it's easier to see, like here, it's literally 1 or 2 candles, right, which is quite hard to spot. And then other times you get, the real breakaway, back up, and then goes, which is easier to spot. Okay, there's nothing we can do about that. That's just the markets. Let me tidy this up. So USD CHF, we are looking for buys. So it's going to be buys. We really need to see what. Sorry. So look at this. Yes, so we're at this. Look, USD is flying through these zones. It still hasn't really broke, but I predict that what we're going to see is we're going to see it break through because it hasn't rejected, right? Break through, come back for the retest, and fly, right? So when the dicks say the dollar comes back for the retest, that's when you're going to get retests here. You're going to get weakness. It'll, the markets will then come back down. It'll come back down, retest this zone, and then it'll fly. That's what's going to happen. And it's just all part of the market movements, okay? So let's wait and see. So I hope that was useful. Oh, sorry. Let's have a look at oil. Yeah, oil. It's still messy, right? I really want it to break out of this zone. I did see it here. I could have taken it, decided not to. I do like sells on oil. Oil is very bearish right now, right? China last year was responsible for buying 70% of the world's oil. This year, they've only bought 20%, leaving a 50% fucking gap, which nobody on the planet can fill. Nobody, right? And it's predicted the same for next year, okay? So oil is bearish as fuck. Now, it may even come to, you see this zone here? It may even come to there, right? Come up, retest the 200 EMA at this point, boom, and then melt. Okay, that's what I'm really looking for is the sales. Gold was an absolute look. So we had this, right? Same again. So look, we had this down for potential sales at this point, but look, it's the same again. Small candle, large engulfing. Once the market breaks it, comes back, retests, rejects, and goes. Now, if we go to the 4 hour, you'll probably see the retest. Look, there it is. Look, breaks above, retests, rejects, and away it goes. It's the same on every time frame, guys. The same. So I had marked this down as sales, but in the actual group, I can't remember if I said it here. in the actual group, what I said was, you have to be careful with gold because it's just bullish, right? You don't really want to be selling gold, but this is a prime area of which we could sell from. But it never came in. But look, here's your other zone. Look, small candle, large engulfing, drag it across, boom, area of resistance. And here's the tip as well, tip down here, and away it goes. Phenomenal. I missed it though. I never caught it. Here's the thing. Look. Here is silver. So I'm going to be looking to buy silver on Monday. Silver is one that caught me out on sales. We did get some sales, and I'll just show you. Hold on. So look, what happened the other day, right? I'll draw this out. See this small candle, large engulfing. So your markup, this was already marked up. I've just moved it obviously during the week, right? Look, marked up. Once it came in here for the retest reject, we entered sales, right? Now what happened was the market actually flew down to here when I went to bed. And what I did was, I'll show you. My stop loss was here, right? Then before I went to bed, the market was already, it was round about here, and I thought, oh, it's fucking miles away. So what I did was I entered around here, and I literally done this. That's what I entered at this confirmation here. I says, right, as this candle past this wick, that's what I entered, right? And I put my stop loss to break even. Look what it done. Look, came back up, hit my fucking stop, and then melted. It's like, for fuck's sake. It happens. So, that's it. However, guys, the real trade, I believe, is going to be this, right? We just have to be careful. Let's have a look on the daily. We need to be careful. So it's potentially going to fly up here, and our next. So your TP1 is going to be this zone here, right? There's your TP1. Get rid of that. Remove. Boom. There we go. Let me just draw this out. There we go. You're going to see something along these lines, okay? Boom, 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 right? So that's looking phenomenal. I would really like to see the pullback before I entered it, okay? But yeah, that is looking fantastic on the daily time frame for buys. So that's silver. Copper, let's have a look. Copper still looking great for buys. We just need to wait and see. It is below the 200 EMA, which does tell us sells, but look, it's only just below, right? So it could be like this below, bang, and away it goes. Copper, I believe, I still believe it's buys until we see it break below, retest, reject, and then go. So if it comes below here, you're just waiting for that bang, bang, and away we go, right? But I still believe it's going to be, I still believe so far it's buys, right? Retest, you're going to get a double bottom, bang, 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 and then it'll start taking off, right? That is it, guys. This has been a bit of a long video, an hour and 17 minutes. I hope you guys took a lot away from this. Like I said, look, see if you have a losing week. Who gives a fuck? If you cannot handle losses, you shouldn't even bother trading because it's all a part of the game. You cannot make money if you are not willing to risk money. It's what I say to everyone who's in my managed account because everyone's very quick to ask, well, how much do you make per month? Who fucking knows, right? Who the fuck knows? It's like saying, how long is a piece of string? How the fuck do you know that? You're asking me to predict the future, right? Which is impossible. Nobody fucking knows. But the real question to yourselves as traders should be, how much money are you willing to risk in order to see if your trade is going to pan out? Yeah, if you're like, oh, well, what do you mean risk money? I don't want to risk money. I don't want to lose my money. Well, you can't fucking trade then, can you? Because it's all about that. There is no reward without the risk, guys, okay? All we can do is we can minimize our risk and we can pick the best possible trade setups and stick to our rules, stick to our strategy. Below this video, I have included a link to a copy of my rules. If you want to take them, mix them up, you can have a look at them. Don't have to copy them exactly because we have different personalities, right? And maybe you're a scalp trader or day trader or whatever, and you have different rules to me. But at least you're going to have a nice outline of good trading rules, right? And you can then edit it and adapt it to whatever you like, okay? Below, there is also a link, guys. We have our Premium Trading Academy Discord, right? It's £97 per month, and we offer 1 month completely free. Just to show, look, we know what we're talking about. We're not fucking shit stains. And so that you can physically see that before you start spending your hard-earned money, we give you a month for free. However, After this year, after December, we are no longer offering a free month because our results are just fucking insane, guys. I can't show you just now because in order for me to keep the screen small and the quality high, I have to record this screen by window instead of recording entire screen. And in order for me to show you the Discord, I need to press the recording as entire screen. So my apologies, okay? But look, I've showed you plenty of times on the other videos, our trade results, they're fucking phenomenal. So yeah, this is our last month where we're going to be doing a free month. After that, it's just going to be straight on to £97 a month, guys. Because the thing is, when you copy our trades, like if you copy in one day and you're up, you're going to be making $200, $300 in that one day, right? So it covers your entire month's fucking subscription, right? So, and it's not if you're thinking, fuck, I don't have £97 a month, like that's a lot of money. Again, guys, I'm not being a dick here. You shouldn't be trading if you don't have £97 a month. Trading is the last fucking thing on this planet you should be doing. You should be getting a second fucking job to build up your income and then look at trading. All right. I'm not being a dick there. I'm being real with you. Many of these fucking idiots on Instagram are not being real and honest with you because they just want to take your fucking money. Right. I'm being honest with you. But that is it, guys. Okay. Much love. Thank you for following. There's links down below for free month on Trading Discord. There's links down below for my trading rules. There's links down below for what else? I've got something else down there for you, which is free. I've completely forgot, but there is something down there for free again. And there's links down there if you want to check out Prime Market Terminal. There's a discount there, which is automatically in my link. I think it's 15% discount you get, which is really good. Don't be put off by all of these numbers frying your brain. I can teach you how to do it. Okay, it's very simple. What else? Yeah, I think that is it, guys. Okay, much love. I'm Ryan Mack. Welcome to the trading, guys. Don't forget to jump across to like and subscribe to our YouTube if you like this free education. And also, we have Instagram. So if you want to talk to us on a daily basis, jump across to our Instagram, which is The Trading Guys. Okay, see you there. Have a great week.